Very good. That is really dog and bugs. Genius.
Hey boys and girls, thank you for clicking on this video. We're starting off the lesson with some warm-up rebus puzzles. If you think you know what any of these three boxes are referring to in terms of a common phrase or saying, let me know down in the comments what your guesses are or flip me an email. These are all pretty tough. Just heads up with this first one, this thing right here is a comma, which is important. All right, today's lesson is all about income tax. So this is a really important lesson for anyone who plans to pay taxes one day, which is pretty much everyone. So it's really important that you understand how income taxes work and how they are calculated. So yeah, a lot of content today, but it is a really important video. All right, we're going to start off with an example to talk about what taxable income is. So we're starting off with Bert, just down here. Bert is a mortician who earned an $80,000 salary last financial year. Okay, in case you aren't aware, the financial year starts on July 1st and then goes through till June 30. So July is typically referred to as tax season. Okay, on top of his salary, he also earned $15,000 from his investments. This might be stock market investments or it could be real estate. Anyway, somehow he's earned an extra $15,000. Okay, Bert had to spend $5,000 on work-related expenses. Okay, so there was things that he needed to purchase for his job as a mortician. It could have been equipment or clothing or stationery, anything like that. He had to spend $5,000 on stuff for his job. Okay, so if we take his $80,000 salary and we add on the $15,000 that he earned from his investments, we get $95,000, and this is how much money Bert has earned in total in the last financial year. We refer to this number as the gross income. Okay, so gross typically means total. Bert's total income from all of his revenue streams. Now, of that $95,000 income, $5,000 of that has been spent on work-related expenses to do his job. Okay, so what we do is we take that $5,000 away from our gross income, leaving us with $90,000. Okay, this remaining figure is what's called the taxable income. Okay, this is the figure that your tax payments are calculated on, which is why it's called the taxable income. Okay, our work-related expenses we're going to refer to as tax deductions because they reduce your income, which means you're going to pay less tax. So here's how that works. Originally, because Bert was thought to be earning $95,000, he would have been taxed on his $95,000 income. The government would have said, all right, you're earning $95,000, you've got to pay this much tax, probably somewhere around maybe $25,000. What Bert then does is he puts in a tax return and he says, hang on, but $5,000 of my income was spent on my job. So I didn't really earn $95,000, I really earned $90,000. So I shouldn't be paying taxes on $95,000, I should be paying taxes on $90,000, which means I've paid too much. Okay, that's what your tax return says to the tax office. Then the tax office says, yep, fair enough, you've paid too much tax, so however much you've paid in excess, we're going to give back to you, and that's called your tax return or a tax refund. Okay, so that's why at the end of the financial year, at the start of July, full-time workers will often put in a tax return to lodge their tax deductions, to reduce their income, to reduce how much tax they should have paid, to try and get some back from the government. That's how it usually works in most cases. Okay, so here are the income tax rates as of when this video is published in 2021. So these are for Australia. As we can see, if you are earning between $0 and $18,200, you will pay no income tax. Okay, so your first $18,000 are tax-free. Then any money you earn over $18,200 up to $45,000, you've got to pay 19% of that to the government in your income tax. Okay, so 19 cents out of every dollar that you earn between $18,200 and $45,000 goes to the government. Okay, and then as we can see, as you start to earn more and more money, the tax rate increases. So any money that you're earning over $180,000, you're gonna have to pay 45% of that in tax. Okay, we're seeing these figures here for the middle bracket, the 45 to 120. It says we've got to pay $5,092 plus 32.5 cents on the dollar for everything earned over 45,000. This 5,092 is just the total sum of the column above. Okay, so it's 19% up to 18,200. If you are earning 18,200, well, 19% of that is 5,092. Okay, so the numbers at the start are just doing the previous rows for you, just to save you some time. Okay, all right, let's have an example of using this tax table to calculate some income tax. Let's first of all look at just an average worker. So the median, so the middle annual salary for a full-time worker in New South Wales in recent years was $52,732 per year. All right, we're going to use this table to figure out how much of this figure is going to be paid back to the government in income tax. All right, so first things first, we've got to figure out which tax bracket we're going to be calculating in. 52,000 is above 45 but less than 120, so we're going to be in this tax bracket right here. All right, so we need to do $5,092, and then we're going to add to that 32.5 cents for every dollar, which is the same thing as 32.5%, okay, of any money that we earn over 45 grand. So first of all, let's find out how much money over 45 grand we've earned. So we'll do 52,732. We'll take away 45 grand and we get 7,732. Okay, that's the money that we've earned over 45 grand. So we need to find 32.5% of this figure. Then we'll add the 5,092 and we'll have our total income tax. All right, so 32.5% of the excess gets us $2,512.90. Now we add on the 5,092 to get our total tax payable. So it turns out that if you're earning $52,732 per year, you're going to need to pay $7,604.90 in income tax. So those are taxes that go to the government to pay for hospitals, roads, and of course, maths teachers. All right, on to the next example. So we're looking at Ernie. Ernie is a plumber who earned $35,000 in the last financial year. So that's his income. He also made $3,500 from some investments. So again, that could be stock investments, real estate, we don't know, just extra money. Okay, Ernie spent $1,800 on tools and also spent $30 per week on union fees. Okay, if you're part of a workers' union, the fees that you pay to be in that union can be classed as a tax deduction. So they will reduce your taxable income. Okay, first question is finding out what Ernie's taxable income is. So as we saw in the introduction, we need to find out, first of all, how much money Ernie has earned in total in the year. Then we'll take away how much money he spent on his deductions, which is the things that you need for your job. All right, so our gross income is going to be our salary of $35,000 plus the money from our investments. So in total, Ernie has earned $38,500 in the last financial year. So that's our taxable income. Oh, sorry, that's our gross income, pardon me. All right, now we're going to subtract from that our allowable deductions, which is going to be our $1,800 for our tools and also $30 per week for union fees. So for this $30, because it's per week, we need to multiply it by 52. So our taxable income is going to be our gross income of $38,500. We'll take away the cost of the tools and we'll take away the weekly union payments. Okay, this figure works out to be $35,140. So this is the figure that Ernie is going to pay tax on. So this is called his taxable income. Okay, now part B is talking about the Medicare levy. So in Australia, we have socialised medicine, which means you can go to the hospital and get yourself fixed up and you don't have to pay for it. Okay, because everyone who pays tax is going to pay about 2% of their taxable income towards the healthcare system to fund it. And this is called a Medicare levy. Okay, so Ernie's Medicare levy is going to be 2% of his taxable income. How much will he pay? So for question B, all we need to find is 2% of the figure that we calculated in part A. So we're going to find 2% of 35,140. Okay, into a calculator, we get this figure of $702.80. Okay, this is going to go on top of his income tax. So Ernie is going to pay $700 to help fund the Medicare system because we all got to pay our part. Okay, up next, we are looking at Oscar the Grouch, everybody's favorite homeless Muppet. We have the tax tables once again. So this is a little bit different to the tax table that we looked at the start of the lesson. This is from a bit of an older year that goes with this question. Okay, so the tax rates do change a bit for different years, but they're always pretty similar. Okay, so here's our 2019 to 2020 financial year tax table. During this time, Oscar had a taxable income, so not a gross income, a taxable income of 122 grand 680. Okay, he paid $3,000 per month in pay-as-you-go tax. Okay, what this means is that you wouldn't want to get to the end of the financial year and then say, hey, I earned 100 grand, and then the government would say, oh, sweet, can you send us 30 grand? Because that would really, really sting. So the way most people pay taxes is they pay tax as they earn money. What that means is if you're paid fortnightly, part of your fortnightly check will get taken out and given straight to the tax office, so you don't have to worry about it. Okay, so it's better to pay taxes as you go rather than paying a lump sum at the end of the financial year, because that would really suck. Okay, so that's what pay as you go means. All right, using that information, we're going to calculate whether Oscar is going to get a tax refund or if he's going to owe more tax. And for this one, we're going to ignore the Medicare levy. So we're just going to look at just the income tax for this question. All right, so let's have a go. So based on Oscar's taxable income, which has already been calculated for us as 122,680, that tells us Oscar is going to fall into this tax bracket right here, this second from the top. All right, so in this tax bracket, we need to be doing a calculation of 20 grand 797. And then for every dollar that Oscar earns over 90 grand, we're going to pay 37% of that. Okay, sweet. So first of all, again, let's figure out how far over 90 grand we are, because we're going to do 37% of that figure. Okay, so we take our taxable income, we take away 90,000, and we get a figure of 32,680. This is the money that we're earning over 90 grand. We're going to do 37 cents on the dollar of this figure. So we do 32,680 multiplied by 37%. That gets us an answer of $12,091.60. Okay, now don't forget, we also have to add to that the figure at the start, which is the total figure from the previous rows in the tax table. That's 20,797. So we'll add that to our 12,000. That's going to be our total tax payable. So in total, we should be paying $32,888.60. Okay, so this calculation is us saying, based on the tax table, Oscar, this is how much tax you should have paid. Now we'll see how much tax Oscar did pay. Okay, so the taxes that he did pay, the question says we are paying $3,000 per month, and we're going over an entire financial year, so that will be 12 months. So Oscar's tax paid is going to be $3,000, and he's going to pay that 12 times. So in total, throughout the year, Oscar has paid $36,000 in taxes. All right, so this is good news because we have paid more taxes than we should have. What this means is the difference between these two numbers is how much Oscar is going to get back. Okay, it's always better to get money back rather than being sent a tax bill saying, hey, you didn't pay enough taxes. So let's do the difference between 36,000 and 32,888. We'll subtract the two numbers. We get a figure of $3,111.40. This is how much, this figure is how much Oscar has overpaid in terms of tax. So this is how much he gets refunded. All right, great news for Oscar. He's getting some money back for his tax return.
Great success.
Okay, for the next one, we're finishing off with a challenge question, which kind of incorporates everything we've looked at today all into one question. This is actually from an HSC exam paper, so it's a pretty tough one. This time we have Elmo, who has a gross or a total annual salary of $84,000. He has tax deductions of $1,000 for work-related travel and $500 for stationery. Okay, so work-related travel is an interesting one. If you're driving to work, you can't claim the fuel that it costs you to get to work. However, if you're driving for work, you can claim that. So if your job requires you to drive around, you can claim travel expenses, but you can't claim the travel to get to work because everybody's got to do that. Okay? And stationery that you use for work, if you're paying for it, you can claim it as a tax deduction, which I'm sure a lot of teachers like myself do a lot of. Okay, he will pay a Medicare levy of 1.5% of his taxable income. All right, so that Medicare levy is going to go on top of our income taxes. Okay, Elmo has already paid $18,500 in pay-as-you-go tax throughout the year. Will he receive a tax refund or a tax bill? Okay, so similar to the last question, we are going to calculate how much tax Elmo should have paid. We're going to compare that to how much tax he did pay to determine whether he's got to pay more or if he's going to get some back. Okay, so first things first, we need to use this table, which means we need to find our taxable income. Okay, if the concepts in this video have made sense to you, you're welcome to pause and see if you can make your way through this question by yourself. Otherwise, let's go through it now. All right, so our taxable income, once again, is our gross income, take away our deductions. So we've got a gross income of $84,000. We've got two deductions in our question, so we're going to subtract those from $84,000. That gets us a taxable income of $82,500. Okay, that taxable income puts us once again in the second highest tax bracket between $80,000 and $180,000. So just here. So we can ignore the other rows. We're just going to be calculating based off this row right here. Okay, so for this row, we're going to be paying $17,547. And on top of that, we're going to figure out how much money over $80,000 we've earned. And we're going to do 37% of that number, 37 cents on the dollar. Okay, so $82,500. This is clearly $2,500 over 80 grand. So we need to find 37% of 2,500. Okay, because we're doing this part here. That works out to be $925. So this will be added on to the $17,547 to be our total tax payable. How much tax we should be paying. Okay, that figure works out to be $18,472. All right, so based on the maths, based on the tax rates, Elmo should have paid $18,472. However, we've also got to include our Medicare levy. Okay, so the Medicare levy gets added on top of our tax payable. So to figure out a Medicare levy, we've got to figure out 1.5% of our taxable income, which is the $82,500. So our next step is the Medicare levy using this calculation. That works out to be $1,237.50. Okay, beautiful. So it originally looks like Elmo was sweet because his tax payable was less than his tax paid. However, we've got to include the Medicare levy as well. So we're going to add this green figure for the Medicare levy to our tax payable. Okay, adding these two numbers together gets us an answer of $19,709.50. Okay, now we're looking at this number and we're looking at this number and we're saying
he cannot afford.
You can't afford it, Elmo. You should have paid $19,709.50, but you only paid $18,500. So you're gonna have to pay some more. So we subtract these two numbers, we get an answer of $1,209.50. And this is how much extra the tax office will say, Elmo, you got to pay us. You didn't pay enough taxes, you naughty boy. So that's called a tax bill. It's the opposite of a tax refund. It's unfortunate, but you do see it. So bad luck, Elmo. You got to cough up some more coins. All right, there are some more practice questions for my class to have a go at on the Google Classroom. Let me know if you need any more help. Thanks so much for watching, and I hope you learned something valuable about paying taxes. Catch you guys later. Bye.